Bollinger Bands %B displays the information from Bollinger Bands with the closing price as a percentage of the upper and lower Bollinger Bands. When closing price is equal to the lower band, the %B indicator is at 0. When closing price is below the lower band, the %B indicator will be below 0. When closing price is equal to the upper band, the %B indicator will be equal to 100%. And when closing price is higher than the upper band, %B will be over 100%. If closing price is equal to the median of the Bollinger Band, %B would be 50. This lesson will explore the differences and similarities between this %B indicator and regular Bollinger Bands through real chart examples. Some may find they prefer one over the other under certain conditions. While it may not make much of a difference to other people, the chart examples will be from various markets and time ranges, so information from this series can be of use to you no matter when you watch this, or which particular charts you choose to apply the %B indicator on. Some may consider the %B indicator to be a cleaner way of displaying price deviation from the mean, compared to the regular Bollinger Bands indicator. That could be helpful in a case like this, where reaching 2 standard deviations over the mean doesn't necessarily guarantee a bearish reversal. Whereas with regular Bollinger Bands, some may get the impression reaching the upper band is much more bearish than it actually is. As we already know from the last tutorial covering regular Bollinger Bands, a strong breakout such as this bullish breakout currently underway will consistently see price stay at or even above the upper Bollinger Band. While with the %B variant, this information will be displayed with the indicator's values consistently remaining around 100. This is certainly a close to ideal example of a strong trend. These features can be seen to a lesser degree around these areas where the uptrend has temporarily regained strength. When a trend begins to contract into a more horizontal phase, the transition to more horizontal movement can be seen even more clearly, with the %B indicator often showing movements like this. Then when there's a stronger downtrend like this with price consistently closing around the lower Bollinger Band, %B will often look quite similar to this, with values remaining close to 0. When there are higher volatility spikes for a short time like these, you can see why some might have the preference for the cleaner appearance of the Bollinger Bands %B indicator. When there is an increase in volatility and a relatively major price movement during a relatively short time, we can get this kind of discrepancy between the two indicators, where the median moving average line is moving neutral to bearish, just like price on its gentle downward slope following the major drop, while at the same time the Bollinger Bands %B indicator moves higher before catching up when the real volatility contraction begins, and it starts moving more neutral to bearish just like price and the Bollinger Bands indicator. This noticeable rise in the %B indicator is due to closing prices remaining at a higher position relative to the lower band before that major volatility contraction begins. That's not as apparent during this next more minor acceleration to the ongoing downtrend, since price reverses back up relatively quickly following the brief dip under the lower Bollinger Band and the brief dip of the %B indicator under 0. When there's a major drop or jump in price, Bollinger Bands generally give us a better idea of the expansion and contraction of volatility. When it comes to gaps, both these indicators don't experience much distortion compared to most other indicators. In this case, when the gap immediately starts being filled, we look for %B to quickly go back under 100 and price to close under the upper Bollinger Band. When there's a gap down and we're looking for a strong bearish continuation, we want %B to stay very close to 0, and for price to remain around the lower Bollinger Band while the Bollinger Bands expand. When moving towards more stable and shallower portions of a trend, %B will more frequently be fluctuating between 100 and 0. With this gap down, we see a similar phenomenon to what we saw at the end of the last example, where Bollinger Bands %B is rising away from 0, while price is neutral to slightly bearish between the upper and the lower Bollinger Band, which still have a wide area in between them. And only after the Bollinger Bands begin to significantly contract do we see %B more closely resemble the movement of price on that shallow decline. As usual with a steady upward reversal, we'll see %B hover around 100, while a consistent row of green candles remains near the upper Bollinger Band. Now, price is more range-bound, and even with the presence of gaps creating more volatility when just using the Bollinger Bands %B indicator, we still look for values to cross back under 100 as the gap up begins to be filled. And it's the opposite with this recent gap down. We'll be looking for %B to cross back over 0 during the gap down fill. Here are some more examples of the same thing, but during a period of more constant short-term volatility. Here's a similar situation to what we've seen before, except it's with a gap up. Price remains flat to slightly bullish, while the Bollinger Bands %B indicator presents a slight decline due to price still being relatively low compared to the upper band because the bands are still far apart prior to the major contraction. It's just like the gap down situations we've seen before, only in the reverse, speaking of which one is happening right now. When there's a major spike in short-term volatility during this otherwise stable downtrend, it's quite normal to see sharp points around the 0 and 100 marks of the %B indicator. As usual, a steady incline will see the %B indicator plateau close to 100. Now, with the chart transitioning to a neutral to slightly bearish phase, we can expect Bollinger Bands %B to stay mostly between 100 and 0. For further uptrend development, we want to see a continuation begin with contact at and preferably over 100. It would also be preferable to see a position maintained at or over 100, which is certainly not the case here, meaning it's a moderately strong continuation, rather than an exceedingly strong continuation that does have the Bollinger Bands %B indicator mostly within the sufficient 50 to 100 range. Naturally, the steady incline weakened around the same time Bollinger Bands %B begins to cross towards the 50 to 0 range. This next chart example begins with a steady downtrend, and then with the line of the Bollinger Bands %B indicator rapidly closing up towards 100. We could be getting an overly bullish picture if just looking at this indicator alone and not paying attention to the mostly flat trajectory of the candles over the past few weeks, during a time when Bollinger Bands significantly contracted as volatility decreased. When trading into a narrower range is sustained, short-term sentiment can shift rapidly and constantly. In situations like this, the market is generally moving more gradually, with some short-term accelerations, which often results in candles not closing outside of 2 standard deviations from the mean for very long, if these boundaries are even reached. Meaning the information from these indicators can be less clear when a reversal like this gradually takes place over an extended period prior to the clear breakout when the trend gets underway. So remember to also pay attention to the types of candles that form when nearing the upper and lower boundaries of these indicators. For instance, here, no major downtrend gets underway since there's barely contact with the lower boundaries of these indicators before larger green candles quickly send them back up. And the next sharp downswing is not maintained even though there's initially a consistent presence near the lower boundaries of both these indicators. There's no clear row of bullish or bearish candles, but rather an overall neutral to bearish row of candles that actually keep closing prices relatively flat during what would first appear to be a sustaining decline. Here's a completely different chart and market, but by now you should be able to recognize these familiar characteristics of the strongest portions of a trend on larger and smaller scales. If we just focus on the Bollinger Bands %B indicator during the clear downtrend at the beginning of this example, we look for closing prices to be on a clear decline while values of the indicator remain quite close to 0. Then, with the recent pause of a moderate uptrend, we look for those classic signs of reaching newer highs with a row of steeper green candles, while %B maintains a clear presence around 100. With a gradual transition towards a shallow decline, there's still some residual bullish sentiment in the market, as seen with these near-instant upswings upon nearing 0 with a %B indicator, which is in contrast to when the downtrend begins to steepen during a period when the Bollinger Bands %B indicator mostly stays below 50 and has more consistent contact near 0, just like the characteristics of that stable and stronger downtrend at the beginning of this example. For more on indicators as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.